Hey there, hey guys. Hey, thank you very much for joining me. Give me a moment while I set things up. Okay, got to. Okay, give me a moment. I do apologize for that. Give me a moment. Okay. Okay, while we are waiting, wow, we have many people today. Hey, thank you very much for joining me today. Hey, hi Alfredo. Hi, Christine. Hi, Jeremy. Hi, Renka. Hi, Marik. Hi, Nicola, and hi, Ralph. Hey, thank you very much for joining me today on this Vantage webinar. Okay, let me turn on the chat. Hi, guys. Oh, guys. Okay, question and answer. Let me set it to, you can chat with everyone. Hello. Hey. Hey there. Hey, Alfredo. Hey, thank you for joining. Hey, nice to meet you. It's my first time. Hey, thank you very much for joining me today, Lenka. I appreciate it. Well, today we'll be learning something very exciting. We'll be learning on the advanced RSI trading strategy. Well, before we start, let me. Okay, this webinar is brought to you by Everest Fortune Group in collaboration with Vantage Markets. We are an award-winning research firm, and we are the finalists for 2019, 2020, and 2021 for the best Forex and equity research. We also work with the major financial institutions to help them forecast where the markets are heading. And now we have a special partnership with Vantage Markets, where we are bringing you guys the good stuff every day. Hey, hi, Zoran. Nice to see you again. Yes, Zoran. Okay. Moving on. Hey, hi there. Okay, disclaimer as usual, guys. This webinar is purely educational, and nothing in this webinar should be construed as investment or trading advice. So please do your own due diligence before you start trading. Okay, I will start introducing our analyst team. First, we have Desmond Leong. He is our chief trader. Next, we have the prop trading team. We have Cassandra and Jindal. Next, the investments analyst team. We have me. My name is Chen Yongjing, and we have Jia Ning also on the team. Okay, let me get to this first before we begin. So on the Vantage Markets website, to find future webinars like this, you can go under Education and Tools. Education webinars is listed as popular. So actually, you can go take a look. Today, 5 p.m. GMT, we have the advanced RSI trading strategies, which I will be presenting. Hey, I see Trung. Hi, Trung. Nice to see you again. And tomorrow, we have a New York live analysis session by Lee Sing Gun. And at 6:30 p.m., we have an event-driven approach to technical analysis. So you can actually see the calendar, the events, and what is coming up. Okay, let's get right into the good stuff. Okay, today, what can you expect? What are you expecting today? So we'll be presenting the RSI indicator, and we'll be going through topics like best settings to use for RSI, secret strategies the institutions use, and identifying divergences. Okay, first, Who is the creator for the RSI? Well, his name is J. Wallace Wilder Jr. So he actually just passed away last year, April 18, 2021. Rest in peace to him. Okay, J. Wallace Wilder Jr. was an American mechanical engineer. He turned into a real estate developer, and he is also best known for his work in technical analysis. He is also the father of several technical indicators, such as average true range, ATR, relative strength index, ATR, RSI, and the average directional index, and also the parabolic SAR. Okay, what is the RSI indicator? How many of you guys have used the RSI indicator? Do let me know in chat. Do let me know. I'm sure you guys have something like this for those who are using. You have this extra little bar at the bottom of your trading view charts. I'm pretty sure RSI, MACD, all these indicators are one of the top few beginner indicators that are recommended. When you search on Google how to trade, they'll show you RSI. Okay, for the RSI, it is a technical indicator. It measures the strength or weakness of a currency pair by comparing its up movements and down movements over a given period of time. So it does this by keeping track of recent price gains and losses and comparing them to the current price. The RSI indicator was created by that dude just now. I mentioned his name, J. Wallace Wilder Jr. And it first appeared in 1978 in his book, New Concepts in Technical Trading Systems. Hey there, Trung, I see that you apply RSI, but you don't think you know how to master it. Well, later on we can get right into it. I can show you guys on the live charts how you can improve on it. As usual, I would not recommend using one indicator alone to trade. You should use multiple indicators or confluences to help with your trading and have a better confidence, better trade entry, and a higher probability trade. Okay, the RSI is considered a momentum indicator, which means that it's used to determine the speed and strength of price movement and whether the underlying momentum is strengthening, or weakening. So it's kind of the opposite. When it's strengthening, price is in the oversold territory where people start to buy, and weakening where it's in the overbought area. Aside from helping traders identify price momentum, RSI is also used to identify overbought and oversold conditions. It's also used for divergence and hidden divergence signals. Okay, the best settings to use for RSI. There's actually one more. I actually was looking up. Some people they want to have an early insight. You can actually set it to 60 and 40 also. But the default one, if you turn on TradingView, you search RSI, is usually the 70 and 30. Okay, the RSI is displayed as an oscillator that fluctuates between 0 and 100. So if we have the settings of, let's say, the default one, 70 and 30. So we set it, the line will move actually. So if you set 80, the line should be higher. If you set to 20, the line goes lower. So readings, we also have a middle line, which is the 50. Okay, readings over 50. Prices that are above 50 and above the 70 overbought area, indicates price movement is overbought and it's rising at this area. And if price is below, this area is falling and this area is an oversold area. So these areas you should consider when price goes up and price goes down below. But we will show it how to implement it on the charts. Okay, now the secret strategies that the institutions use. It's not really secret, there's not much secret. So RSI allows financial institutions to include uncertainties in their estimates. They account for situations where the outcomes may not be 100% known. For example, a bank may be interested in analyzing how a portfolio performs during a volatile and uncertain market. This helps them to have better understanding of their portfolio. It's just a quick look. They do not have some kind of secret strategies. My friend actually works in a bank. They don't use RSI. So it's just a quick analysis, just a quick look on their portfolio. How is it performing? Okay, next, we want to implement divergences to RSI. So we have, it's just a quick one. We have the regular divergence, hidden divergence, and the exaggerated divergence. I see there are more people joining. Hey, thank you very much. Today we have a lot of people. Hey there, Jeremy. Hi there, Hassan. Wow, there's a lot of people today. Okay, so today we'll be just using the regular divergence. How many of you guys are new to trading? So since Lenka, you said it's your first time. Are you new to trading? Okay, first we have the bearish divergence. I think I'll just get right into the charts for this. Since this is an old chart, we want a live chart. Okay, just a quick one. Get to trading view. Okay, we are currently right now, this is my personal account. Okay, I'll delete this off. To apologize for that. Okay. Let us use Euro USD as an example. I think I'll log out of this account. Sign out. Give me a moment while I sign in. I need to swap accounts. I do apologize for the wait. Okay, we are back. The layout, I will use the... Okay, I maybe just use a chart for the webinar. Okay, I need to clear everything out. I need to clear this. Need to load a new layout. Okay, I shall use this layout. Fine. Okay, next. Okay, I got it. Okay, we have the RSI. I will close it out. You can find it under indicators. So you just type RSI. And it's the first one. Technicals, you guys can follow with me through it on your trading view chart. So relative strength index. Turn it on, you should be able to see this. So the default settings are already set. Just now on the charts, we have 70 and 30. So there's also settings for 80 and 20. So for 80 and 20, you are just minimizing the area, making the area smaller. for the overbought and oversold area. So it can actually give you a better and higher probability trade because you're just waiting. Let me set the settings so you guys can see a difference. 80 and 20. So if I press OK, the area actually increases. So the overbought area very happens. See, it very happens right here. But we have a higher confirmation trade. So I'll just use the basic one for today, 70 and 30. Okay, we have more chances on the trade happening. Let's check out the 15 minutes chart. So like a divergence, like a sell area, maybe I'll take a look right here. Okay, we have a divergence here. It means when? Let me draw a horizontal line, vertical line, right here, and here. So what do we see? We actually see price up here, but right there on the RSI, it's the opposite. So this is a divergence. So when you spot that, you can actually start to look for a sell. But then, as I always like to mention, do not focus on only one indicator for trading. Because if you focus only on one indicator, it cannot be that you just, you just use RSI, you relax for the day, then you just go down and sleep. So when the notification comes up, price is above, you start to sell. You still need to apply some kind of other confluence. So it's possible that you can maybe use you can check out to the zones on the right, on the left side, on the left side. So let's say, for example, this divergence that we are currently looking at and the RSI in the overbought area. So some people, including me, I like to use smart money concepts. I think I've said it once and once again. So at this area, we are looking to the left for confirmation. So for me, let's say I use RSI. I want confirmation that the overbought area, I can sell. Why? Why can I sell? Why can I start to sell? Because there's liquidity over there. These just smart money concepts, but I will use other methods, other form of methods. So liquidity was cleared on smart money concepts and price proceeded to head downwards. Okay, let's find other methods on the 30 minutes maybe. Okay, let's check whether there is a projection. So you can actually use Fibonacci projection. So it's called a trend-based Fib extension. You can actually check if price has tapped into that area. So you can see very nicely a Fibonacci projection. This is on the 30 minutes chart. So I'm actually drawing from here to the top of here and back down. So with the projection line, we projected that price has tapped into that area. So if I actually clear this line, clear this divergence line, you can see price nicely, very nicely. It just taps right into it. So if you are using projection Fibonacci lines, this can be used as another confluence on the sell area in RSI and using the Fibonacci projection. So always use additional confluence. So right now we already have the projection. It's possible. Let me check whether we can use the Fib retracements. We can check for Fibonacci extension or Fibonacci expansion. So we can draw. Let's take a look. It's just checking. So we don't have it there. Okay, we don't have the area here too. Okay, so we have look what do we have. So I drew a Fibonacci line from the top to the bottom. And what do we have here? We have the 138.2% Fibonacci. What is it? Fibonacci extension line. So if it's a negative, it's an expansion. If Fibonacci levels are negative, it's an expansion. But if it's a positive, it's an extension above 100. So I can actually say this. So if I were doing a forecast, I would say something like this. I would say that price is in the RSI, it's in the oversold area, and 15 chart is in the oversold area. Price has also tapped into an area, has cleared liquidity. I would add more and more confluence. Liquidity, the buy side liquidity was cleared using smart money concepts, and the Fibonacci projection 78.6% and the 138.2% are intersecting, and price has tapped into that area. So this adds further confluence to my sell. So you want an explanation. You want to be able to explain your trade. If you take an RSI trade with multiple confluences, it gives you more confidence for the trade because multiple areas are lining up, especially Fibonacci's. Many people actually they actually program their EAs, their indicators using Fibonacci. Fibonacci is used a lot in algorithms. So with these areas, you can say with 3 additional confluences, with this total, it's already 5. 1, 2, 3, 4, and 5. What is the 5? Price tapped into the intersection area. So same thing, you cannot just go for a sell based on this. Once this happens, you still have time to enter. How do you enter? What kind of methods do you guys use with RSI? Or you guys just trade based on RSI? When price goes above, you guys just sell? Do you guys do that? Let me know. For me, I'll show you guys an example entry that I might have taken. I remember quite a few regulars, including Zoran. You guys were using smart money concepts. I remember the last webinar, Zoran, you implemented smart money concepts on a Tesla buy. So how's that trade going, man? Hey, yes, you try to combine SMC, RSI, and volumes. Hey, yes, that's something I might try out. Volumes. Okay, I added the wrong one. Okay, let me cancel this out. Volumes. Why am I adding some random people's indicators? Volume. Okay, this is nice. Okay, we can probably take this as the buy area. Can take a look. Okay, the Tesla trade was in profit and the next day I lost it. Okay, it's fine. It's fine, bro. And it's fine. Actually, it's fine. We take this as every day it's a new learning day. Later, I'll take a look at the Tesla trade. I'll take a look and see where we can possibly improve on. It's okay as long as we take a loss, we step back and learn from it. Okay, so with this, we can actually see using the volume indicator, price started the bullish volume as it went up to the overbought area. The volume started to decrease significantly until it came to a halt. There was no volume, there was no buy volume, and it also coincides with where the intersection is at the intersection of the Fibonacci. So I'll clear this out. You can actually use volume, multiple ways you can enter. So how would I enter on this trade? So if I'm actually using smart money concepts, I would look for break in market structure. Break in market structure. So I'll look for something like this where price broke a tiny market structure right here. So provided with smart money concepts, when I'm using this method, I always want to wait for liquidity to be cleared on the left side of the chart. So liquidity must always be cleared, then it gives me a higher confluence. If price breaks market structure right there, I can look for a retracement, sell downwards. But as we can see in this sell, price went for a brief sell before the bullish momentum continued to the upside. So let's take a look where we could have entered. Okay, some of you guys actually do use smart money concepts. I remember a few people actually did request possible webinars in future on that. I'll just do a quick one. So what we can do is when price, I'm zooming in. Let me go it down. Okay, on the M15 chart, once price broke the market structure, we let price do its thing. We do not have the fear of missing out. One thing I like about smart money concepts or wipe off is pretty advanced. There's another thing called wipe off. It allows me to let the price do what it wants, and I know price might potentially head back up where I can find myself. So looking at this area right here, I actually spotted a market imbalance. So a quick one for those who are new here. Market imbalance is areas where price previously has not went up, tapped, and reversed back down. So areas like this include here, where price came up just to clear the market imbalance. So what I like to tell people is I always like you to use the 15 minutes, and then I go down to the 5 minutes for a better entry. So with those areas marked out, so just now we on the 15-minute chart, let me get back to the 15-minute chart. So sorry about that. So I will draw it out using a box, so we can identify together how to refine these areas, for better entry. So with such areas in place on the 5 minutes chart, if I'm looking at this right now, I like to tell people that I like to take the first look at this area, the first market imbalance sell. So what do I mean by that? I enter when price immediately taps, my stop loss at the very top, and take profits below, wherever it might be. But a huge issue with this area that I don't like, once I take a look at it, what I do not like about this area is using smart money concepts, you can actually identify lots of liquidity lying at this area, a lot of liquidity lying here. So I would have marked out this area already. I'll mark out this area. My buy entry would be even higher right now. Buy side liquidity, where is it? So my buy entry would have been higher. So I would have invalidated this area. I would not want to enter here anymore. So I'll pull it higher. But let us go live now into possibly the 1 minute chart to maybe spot more liquidity and maybe explain why the price went even higher. Okay, so the best I could maybe refine it, the buy side liquidity here, we can look for is the next area of imbalance. So on the M15 chart just now, is in confluence with another market imbalance zone right here on the 1 minute chart. So I'll delete this away, the M15 one. So I'll pull up, my entry would have been here after I found out about the buy side liquidity. With my stop loss above, I would be risking 27 pips. Okay, so with that, let's see how the trade would have went. So it actually cleared until here, all the way down. It would have been a 1.82 nice risk to reward trade. I normally like to take until there is liquidity, all these areas. I like to close out my trade when I notice all these areas right here. So let me draw it out. So I call this the sell side liquidity. Okay, with this and a refined trade, we are using RSI together with smart money concepts and together with the Fibonacci projection, where price reversed off this area. It adds a lot of confluence to the sell. But let's take a look again. Since I refined my entry to right here using smart money concepts, maybe we can use Fibonacci also. Because as I mentioned, cannot always focus on only one trading style to trade. I might be wrong. I might be wrong if I can set it out or Fips. So take a look. What I always mention, see, I didn't use the Fibonacci earlier, but since we use it, it adds a lot of confluence. What confluence, may I ask? May I say? It's the 61.8% Fibonacci, the golden ratio, that area. Many gurus, they like to mention about the 61.8% area. I back tested it. The 61.8% area is a place where a lot of people like to look for a sell or a buy entry at that retracement area. So take a look. It coincides with the market imbalance that I drew out earlier on the 1 minute chart. So again, I added one more confluence to that area. So I'll just draw it out, 61%. So you can see nicely coincides there. Hey Trung, I just saw your message. You said, yes, there's a lot of fundamental changes in Tesla recently, and it's much easier to find the confluences at hindsight rather than at the time of deciding for the trade. Nice analysis and nice sayings you have there. Well, if you are holding a trade, I do recommend you to be careful on that, especially stocks. Forex even, I do not like to hold my trade over a couple of days. I like to close my trade within the same day. So for me, I'm more of an intraday trader. Okay, as for today I haven't entered any trade. I've been busy the entire day, so I barely have time to look at the charts. But yesterday, as everybody knows, I'm also a very open trader. So if there is a loss, I would say I've taken a loss. How many percent did I take a loss on? You will rarely find people online who admit their losses. So yesterday, I actually took a 1% loss. It hit my stop loss by 1 pip. Only 1 pip or 0.1 pip around there before price reversed to my take profits on euro dollar. Yesterday, I took a loss. So I can show you guys that loss too. Before I forget, I remember there were a few sessions where I actually told people about that, and then I forgot to show my loss. So in this trading session, I'll show you my loss, which I took yesterday. Not everybody is perfect. Everyone takes losses. They would be lying if they always say that they are taking profits. Their win rate is 100%. It's all nonsense. So yeah, yesterday I took a trade here, a reversal sell trade, and take a look. It hit my stop loss, man, before it went to take profit. Take profit. I had a 5 minutes market area right here. 5 minutes candle. So take a look. If price actually went out, I would have garnered a 1 to 2 risk to reward. But look what happened if I zoom closer. Price literally cleared my stop loss, man, by a tiny pip. I'll zoom in all the way. Look at this. Unbelievable. Price cleared by that very much. It's in fact 0.1 pip. So this is the loss I took yesterday. So why did I take this trade yesterday? Let's say if this trade goes to plan, let's say it didn't hit my stop loss, but price went according to plan and take profits. How come I had such confidence in my trade? I only took one trade yesterday, and this was it. And I was done for the day after this loss. So I always like to tell people that I draw out the Asian session. So the Asian session range is from 7 p.m. to 12 a.m. New York time. So I like to draw this out. Asian session range. So yesterday, I set my timing to Singapore time. So it's right here. So I'll set the Asian session as possibly gray. So to 12 o'clock. 7 to 12. 7 a.m. Okay, why did I take this trade? Why did I take this trade? If you take a look using a Fibonacci from top to bottom of the Asian range, price actually cleared the 50% equilibrium on the 50% Asia range. So when price cleared that, I was looking at it, it was at 2:10 p.m. at my time or 2:10 a.m. New York time. So I was watching this area. Price came down. I let price do its thing. So I already marked it out. And looking at using smart money concepts, there was a lot of area right here. There was a lot of liquidity to be cleared. So once price cleared this area, I immediately drew out this area as the sell side liquidity has been taken. And then I moved on to the 1 minute chart. Onto the 1 minute chart, I zoom in. This is the same trade. So I actually entered right here. Exactly there. As you can see, there is a tiny market imbalance. Let me zoom all the way into the chart. This is on the 1 minute. So there's a very tiny area right here. Very tiny. Although there is another market imbalance right here, I did not take this as I felt, I had some kind of instinct. I kind of felt that price could potentially continue going up. And when price rejected this area going down, I noticed the equal highs here. So I was already expecting with that adding confluence that I can actually set a sell entry there. So with my sell entry in place here, sell limits in place here, price went all the way up, cleared my stop loss by 0.1 pip before it continued heading down to my take profit. So you can see it's it's just unfortunate. We can't control the market. So there you have it. A losing trade which I took with my stop loss cleared by 0.1 pip to take profit. 1 to 2 risk to reward. It would have been nice, but it's fine. Okay. So yeah, so maybe I can check out RSI. Maybe there is something that I might have missed out on. Can take a look. Maybe it adds something to my trade. Okay, we don't see much things going on. Maybe on the 1 minute using the RSI. Okay, there's a divergence here actually, but it already happened when they hit my stop loss. It already happened when it hit my stop loss. Right here. It's the same. Well, it's fine, and I don't use indicators, hence I did not look at the RSI. Okay. Do you guys have any other currencies you guys would want me to take a look at where maybe I can implement the RSI? Okay, hey, I just saw your chats. Yubarajaj Rana Maga. I hope I pronounced your name right. If I did not, I do apologize for that. Okay, hi Yong, nice to see you. Can you explain about how to use Ichimoku. When I look in the 4-hour chart, it shows up, but when I look at the 1 hour, it shows down. So which one to look? Also, candlestick patterns. Hey, yes, that's nice. Okay, that's a good question. Let me turn on the Ichimoku crowd. If you guys do not know, I'll turn off the RSI for now. I'll just do a quick explanation. I'll clear this entire chart. The 4-hour charts. Okay, so we are saying on the 4-hour chart, the Ichimoku is on the upside, indicating it's above the Ichimoku crowd, which indicates a bullish market. So you say you go to the 1 hour. It's also on the upside. Which currency are you looking at? So maybe I can take a look at what you are looking at also. Okay. Hey there, hey Chung. Hey, thank you very much for understanding me. I guess all of us feels the same. You feel me, SL can be hurting for you also with not a strong psychology. Psychology is fine, it can be trained. Well, you cannot learn psychology. What you can do is, take it a step at a time. When you take a losing trade, so you can possibly leave your house, go for a walk, a bike ride, or you can do something else when your SL gets hit. For me, when I take one single loss for the day, I'm just out. I know that if I continue trading, I would start revenge trading since it has happened in the past. So well, that was very unfortunate though. 0.1 pip stop loss. It got hit. Okay, you think that you have lost trades even with support from other ideas too. I think you said you think one of the biggest factors that make you lost is trying to trade in the sideways and not from strong support or resistance or holding too long. Yes. I actually implemented the holding too long strategy. I kind of turn it into a strategy. I actually realized also that I held my trades too long. If I hold it for too long, I have an indication. So let's say I open a buy entry. Let's say I enter a buy entry somewhere here, but after 1 hour, price is still fluctuating in my area and haven't take profit somewhere here. Within the hour, as soon as 1 hour passes, it would have invalidated my idea already. Because what I want using the smart money concepts, I want price to have a strong reaction upwards. I want a pretty fast 1 to 2 hours take profits. I do not like to hold trade for more than an hour. It kind of tells me that the trade is going sideways, is going wrong. So yes, when you say that you are trading in the sideways, do you mean that you are trading in a range? I generally do not trade in a range too. I normally wait for price to clear a high or clear a low like here. So it actually cleared. So I like to wait for prices to clear such areas. Okay, not strong support or resistance. How do you draw your support or resistance? Do you draw a line, something like that? I see a lot of traders actually use these kind of lines for their trade. So I'll turn it into green support. So I saw a lot of traders actually use these kind of lines. They draw it out. Well, I used to draw these kind of lines, but I realized it can be very, very subjective if I actually draw these kind of lines on the charts. So some people actually, they can say there's a resistance here. Hey, yes, the big tip on the time limit for holding. Yeah, keep that in mind, it's fine. So that's what I noticed when I look back on my losses. Back then, I think it was during my year 1 of trading, I realized that I like to hold my trades. I want a very, very big swing to the upside. I want to take a very nice profit, very nice peep. So I like to show off. Last time I like to show people, wow, I took a nice 50 peep. So I actually had a thought in my head, I want a 50 peep so I can show off to my friends, the kind of thoughts. Well, trading is for ourselves. It's not for me to show others. That's what I later learned. Okay, so maybe you can take a look back on your losses. Maybe you can see whether holding your trade actually caused the loss. And you also And also one thing that a lot of people do not keep in mind is ideal invalidation. So if you are in what is ideal invalidation? So let's say a price went down and decided go up, and then you enter the buy here. You enter the buy there. So what is ideal invalidation? You are looking for price to continue going to the upside. So ideal invalidation happens like this. So this is an example. This is my personal ideal invalidation. Price goes up, forms goes even higher, but all of a sudden, price decides to break again. It broke a low. So this area broke. I entered a buy right here. But this area decided to break. So once this is done, I immediately know that price could potentially, it might do this and hit my stop loss. It might do that already. So this is an ideal invalidation for me. So if I'm in such a scenario, I would manage my trade. I would watch carefully to see whether price could go back up to the next imbalance area where I will close out my trade already. I'll just close it because the idea is invalidated. There's no point holding and for me to hope that price can potentially going up. I will not gamble with that. So I'll just rather take my profits. The profits would be just a bit short. It would be just like that. And I'll just close it already, rather than hitting my stop loss. Okay, back to the question for Yubaraja Rana Maga. Okay, you say let's see it on New Zealand dollar, NZD USD. Okay, let's take a look. On the 4 hours charts, you were saying that on the 4 hours chart, it shows up, but when on the 1 hour, it shows down. Okay, right now, price is above the Ichimoku cloud, this extremely huge cloud. So it indicates a bullish market. But if you go down to the 1 hour, you were saying, where is the cloud? Where did it go? Okay, price is underneath the Ichimoku cloud. So you want to know which one do you look at? Which one, how do you get the confluence? So what I like to do is I usually like to follow the larger time frame. I like to follow the larger time frame. So if 4 hours it's bullish, I like to generally follow the market trend. So it may be bullish. It may be bullish on the 1 hour, but on the 4 hours, but on the 1 hour, it might be bearish. So let me draw it out. It might be bearish on the smaller time frame. But if you look at the overall, it's still a bullish market. So I'll use a Fib channel to further implement this. So let me get the Fib channel out. The channel. So you can actually see. This is on the H4 chart. You can actually add what do you call this? A channel to add confluence. So on the 4 hours, I'll just write it down. So you can actually have a notebook in front of you. A notebook. You can type out maybe NZD USD. You can type a H4. You can type bullish. Then you move down. You are currently looking at the H1. Oh, then you notice that price is below the Ichimoku cloud. How? It's 4 hours is above, but 1 hour is below. So I'll take this as on the overall larger time frame, it's bullish. So I like to follow trend. So if I'm looking, I will not sell if a larger time frame on H4 is bullish, I'll just look for a long. So I'll probably wait for price to potentially just maybe hit this area where I can start to look for a long. And to add confluence to that, there is a sell side liquidity right here. So if I were you, I might probably wait for price to do its thing, come down, do some sort of retest and hit back up. Just an idea. It might happen, it might not. Just an idea. I would follow the larger time frame trend. So on the H1, I would just say that there is some sort of short-term, I'll call it a short-term H1 bearish market. So that's how you use the Ichimoku crowd. So short-term, to confirm the short-term bearish, price is under the Ichimoku crowd. End of the day, do not use a single indicator for trading. Please always use multiple indicators to trade, especially your methods. Do refine your methods. And if you are using TradingView Pro, there's actually the replay feature where you can replay back and fine-tune your entry. So on the H1, I'll just write H1 short-term bullish. I do not actually type it out on the computer charts. I like to write it on, there's a notepad in front of my desk. So if I'm trading, I'll write everything out. Whether am I following trend? Is my idea for the buy following the trend? I'll write out, and I'll look across the multiple currencies. If my buy, one of the currency, let's say euro dollar, is in a buy, and the larger time frame trend is also trending, is also in a buy, I'll tick it. So it's a higher probability trade. So you want me to take a look at Hassan Kazim. You want me to take a look at the pound Aussie dollar. Let me check. Do I have it here? Yes, I do. GBP AUD. Okay, nice. So what we have here is, so for like something like this, price is above the Ichimoku crowd, which indicates a bullish market. But let's take a look at H4 first. H4, price is within the Ichimoku crowd. So in such circumstances, price could break out of the Ichimoku crowd, or price might, I do apologize for that. Price might fluctuate within the Ichimoku crowd. I'll wait for price to go out of the crowd, close above or close below the crowd to have a clearer indication on where the markets might be heading. So on the H4, we can say that it's a potentially bullish market. So I can draw it out. So with price currently in the bullish channel, I would be looking for a buy instead of a sell. But in the H1 charts, we also have a bullish channel. So it's actually pretty nice. Things are lining up if you actually use multiple confluences. Yeah, so maybe you can take a look at RSI. Maybe there might be a divergence here. So I turn it on, RSI. Okay, there isn't any. So maybe on the 4 hours. Okay, we actually have a divergence here on the H4 chart. Price on the downtrend together with this area. So yeah, it looks pretty nice using RSI, but we won't be there all the time to be looking at the RSI. We cannot set what we cannot do is we cannot set some kind of alert. So for TradingView, if I'm looking to buy or sell in an area, I like to set an alert. I will set a plus area, adds alert for the area. So I will not be looking at the charts all the time. We cannot possibly be just staring at the charts. Every 15 minutes, you run to the chart to check what's up. We don't have that time. We do not be slave to the charts. Last time, when I first started trading, me and my friend, we would be on a Skype call, believe it or not, 7 a.m. in the morning. So the moment I wake up, I'll enter the Skype call where he's already online. So we will be looking at GBP, JPY, GJ. So I actually stay at GJ from 7 a.m. all the way to the night time, all the way to 7 p.m. So it's 12 hours, me and him, we are on the Skype call with our charts open. And every 1 hour or so, 15 minutes, we'll be asking each other, hey, do you think it's a sell here? Do you think it's a buy here? We do not have our own thoughts. We don't have a trading plan. That wasn't the way how things are supposed to be, man. So I've been through that very, very dumb phase of looking at the chart for 12 hours straight at home. 15 minutes, 5 minutes, 1 minute, just staring at it. And what did I gain at the end of the week doing that every day, Monday to Friday? So Monday to Friday, I set a chart for 12 hours without a solid trading plan. So that's combined, it's 60 hours of staring at the chart. That is 2.5 days non-stop in front of the screen. That was very, very crazy back then. And I did not earn any profits, no trading plan. You're just staring, just hoping to make some money off the charts. If your aim is only money without learning, it's unfortunately, I have to say that you will continue losing money if you do not learn. So something hit me hard only when I lost my entire $10,000 account. I blew that account. That was the very first time I woke up. What was I doing on a $10,000 account? It's in US dollars. It's in US dollars, by the way, real money. I blew the entire account 2 years ago. I was entering 5 lots. My trading plan was 5 lots, 5 pips, 5 lots, 5 pips. I earn $250. I get out of the markets. It's very, very dangerous without a solid trading plan. So back then, I'm just sharing my life story. So I hope you guys do not do the same. So let's say I did not know about liquidity, all these kind of buy side liquidity where price can reverse down. So back then I just set my buy here. I set a buy here. 5 lots, man. 5 lots. I entered 5 lots, and if you want to talk to me about stop loss, I did not even have a stop loss. So stop loss was nothing. There was no stop loss. I just entered straight 5 lots, hoping for price to go at least maybe 5 pips or so to my take profit. But when price goes down, I start to panic. And then I close it out. I close it out at the bottom. I remember very clearly. I close it out at the bottom and price goes back up, and I smacked my hand and I said, wow, I could have held my trade and I would have maybe break even or maybe made some more money. I would say, oh, my forecast is right. My forecast is right. But end of the day is I was just greedy. I was chasing the money, and there was no proper trading plan in place. That's how to blow an account. It was very, very painful. I actually stopped trading for around 2 to 3 months. Actually, I think rather than staring at the trunk, you said, rather than staring at the chart, it's coming with strong experience usually gained from loss and hard work of having good psychology. Yes. Many traders during the COVID pandemic at the peak 2020. I remember back then, Forex was blowing up. There were so many trading gurus. Oh, they are selling their courses. $3,000 for a course. Follow them on Instagram. They show you their Lamborghinis. They show you their house. They put a laptop in front of the ocean and then they relax and then they show you, oh, that is how a trader life is. They show that they make few $1,000s while sitting by the beach and then they sell their course. So back then, I actually have friends who actually paid for such courses and they didn't learn anything. And yes, learn from loss. Yes, only when I blew the entire $10,000 account, I actually woke up. I had a 2 to 3 months thought. I actually thought for very, very long whether trading is for me. What was I doing? In fact, back then, really $10,000 was a lot for me. So I actually got a lot of money. My psychology was very, very bad. I was in a bad place. And only from there, I start to think whether I really want to do trading, whether do I really want to learn properly. So I actually took the time off and started to learn properly with a small account. I do not use a demo account because in a demo account, there is no consequences to your trading. You can just enter 5 lots here, 5 lots there, 1 lot here, 1 lot there. So I actually use a small $100 trading account and I started risking back then, risking only 3%. So from 3%, I still managed, believe it or not, I still managed to blow my demo, my $100 real account. I still managed to blow it. Then I start to think, then I start to reduce it down to 1%, and I started to learn Wyckoff and smart money concepts. That was nearly 2 years ago already. And I can firmly say, after sitting down and learning, putting in more time to actually learn than to chase trades, I started to get profitable. Okay, Jeremy, you said that burns due to charting flaw or general economic flop. You want to know if it was macro factor really. Thanks for sharing. Hey, no problem. I like to share these kind of things. So I really hope that you guys do not go through the same thing as me. Or if you guys have been through with me, you guys probably understand where I'm coming from. Okay, it wasn't due to a charting flaw or general economic flop. Back then, I just like to set an area. I just like to search for random areas. I don't have a trading plan in place. So I search for a random area. So search for random area. I try to buy immediately 5 lots. 5 lots or 1 lot with no proper stop loss. I have no stop loss also. That is the worst part. It wasn't any economic flaw, no charting flaw. It was just greed. It was just pure greediness. Hey, you said you were smart. You blew 100,000 back in 2017. Wow, bro. Bro, that's a lot of money, man. That's really a lot of money to blow. How was your psychology? Honestly, after you blew that 100,000, I don't think I would be touching trading if I actually would be going back to trading if I blew 100,000. But I'm glad you held on. Many people from the COVID pandemic who did retail trading actually quit within a year. People who stayed on after their massive losses, 1 to 2 years, you'll notice that they have the resilience. They continue learning and continue wanting to learn the proper way of trading instead of chasing the money. The first year of trading, I'm sure most people are just chasing the money. It's normal, so I do not blame them. 100 is impossible to do in any trading due to leverage support. Do you mean by 100 lots? Trung, do you mean 100 lots at Trung? Or $100 is yeah, I don't think it's possible. I actually did 0.01 or 0.1 lot. I still managed to blow it. So I think I had a margin stopped out. Hey Zoran, you said you had a pause about 6 months. Yes. I'm sure you have actually thought through it. A lot of thinking. A lot of thinking before you continued. So I'm glad you held on. You held on and you are here. We are all learning together. We all want to be profitable and better traders. Do not look at the money first when education, especially learning how the market works, it has to come first. If you don't put that first or put in the time and efforts, burning through midnight oil, maybe 1 to 2 a.m. and start to learn, you cannot be profitable or enter proper trades or even have a trading plan. Okay, I thought you actually meant 100 lot. Okay, it's $100. 100 lots, well, I've actually seen real life. My friends, I wouldn't say friends, I would say friends and colleagues, they have a huge account, around $20 million in Forex accounts. Believe it or not, they are using 100 lots with a 100,000 stop loss, 100,000 to hit their stop loss. And it's only 0.5% of the account. So 100 lots is possible. It's just that you rarely see it in real life, especially. Okay, you needed some time to realize what actually happened. Well, same thing. I actually sat back and then my psychology was extremely bad, man. I just sat back and thinking, wow, I should have done better. I shouldn't have done that. All my money went down the drain. Well, I'm just glad that I'm out of that era. I'm out of that and I'm properly trading now. I think one trade can damage the whole account despite consistent win. That is very dangerous, but that is possible. Even if you are risking 1%, that one trade can damage. How? It can damage your psychology. So as you can even blow an account risking 1%, man. So even 1% you can blow your account. Because you continue, revenge trading. So to train your psychology, maybe after one loss, you can actually go out of your house, do something else, get your mind off the markets. Psychology, no one can teach you that. No one can force you to do that. You cannot learn psychology from YouTube videos. You cannot say have a guru to teach you psychology. It's all on you, whether you want to lift your itchy fingers off the charts, off the mouse and the keyboard and go out. Okay, now you only risk 0.2% and always put a SL. SL. Hey man, I like your trading style. I really like your trading style, 0.2%. That's very, very good risk management. And I'm glad you also have a trading plan in place, Zoran. Hey Trung, you said you think due to wrong money management and too much diverse assets. It's possible due to that also, possible, where I have friends who actually have all in on one single stock. So they put all their savings on one single stock, banking on it to go up, or on cryptocurrency. I've seen quite a few of them in real life that lost their savings. Friends from childhood who actually all in on crypto, and it's down now. Down to where? My questions about news to look. I look on Forex Economic Calendar. So which do you recommend? I use forexfactory.com. Forexfactory.com. I just send it out into chat so you can take a look. So I usually look at calendar. Under calendar, where you can filter out the currencies that you are trading. So if I'm trading euro dollar, I'll put none first and I'll take USD and euro, apply filter. I'll get the news events for the day. Okay, is there any further questions from you guys before I end the webinar? Hey, thank you. Today has been really, very engaging, man. And I really glad that some of you guys actually understood the psychology part and what I've went through. And you guys also went through the same thing. Hey, thank you. Thank you, Yubaraja Rana Maga. Thank you very much for joining, guys. If you guys have any questions, any more questions, feel free to leave in the chats before I end this webinar. Hey, great sharing, especially your trading experience. Hey, thank you for sharing the experience. Hey, no problem. I like to be upfront. I don't like to lie, like all those other trading gurus, or I'm not a guru, I'm just a webinar host. So, but I like to be honest about it. Can we rewatch the webinars? Apologies if anyone asked already. Oh, no one asked already. Well, they might upload on the Vantage YouTube channel. You can actually check it out. Maybe it's on the Vantage YouTube channel. Okay, so they might upload here. Yes, they actually upload it on YouTube. I saw it here on webinar, 13 October, trading strategy. I was talking about that. So saying it's Vantage Plus. Okay, yes, it's actually here right now. Copy link address. So this webinar is live right now on here. Yeah, it's right now. It's loading right here. It's right. You can actually take a look back right here. Okay, thank you, Israel Okbona. Thank you, Zoran. Hey, thanks, Zoran, for letting me know on that. Actually, I didn't really check on where the webinars will be uploaded to. Appreciate that. Hey, thank you very much, you guys, for joining. Thank you so much for the education. Hey, no problem. I hope you guys do join me soon on the next Vantage webinar. You guys can check it out on vantagemarkets.com/webinars for the next session. I do hope to share more of my experience and my trading strategy with you guys. And I hope you guys have a good day. I'll be ending this right now. See you guys soon, man. Thank you for joining. Need to end this. Hey, good night. Bye, guys.